Welcome to TFN Smart Trading Action Alert. I'm Laura Cadden. The volatility we've been experiencing in most world markets of late can make it difficult for investors and traders to remember that the most prominent characteristic of the year 2007 is still the global bull market in equities. Despite recent corrections, even the Dow Jones Industrial Index is up over 20% year over year. Now, in any other market climate, growth like this would be considered outrageous. But take note that in Hong Kong, and the Hang Seng is up almost 50% since last September, so is Malaysia's KLSE. The Shanghai Composite is up over 220% year over year. Investors with holdings in international equities, be it just in mutual funds, have reaped the benefits of international diversification. But how about traders? Market valuations grew 50, 100, even 200% a year, and there were short-term drawbacks of 10% and more in some markets that translated into excellent short-term buying opportunities. There are genuine pitfalls waiting for traders who hope to cut themselves a nicely sized piece of the pie without the benefit of institutional muscle. Because despite improved openness and accessibility, there are still plenty of hurdles to investing directly in some of the most promising markets. Not knowing what to buy, not being able to buy shares directly, and establishing a workable exit strategy in the event of a volatile market caving in on itself. My guest today is Wave Strength Options Weekly, Adam Lass. So Adam, over the years you've created tons of profitable strategies for your readers that profited from both the upside and the downside of markets and commodities, and they are easy to follow and relatively safe. How did you do this?
Well, it's relatively straightforward once you have the right components in place. We start by using wave strength power ratings to compare and contrast national and international markets. This allows us to use a series of indicators to take it out of the realm of, say, ringgits and dollars and bring it back to apples and apples.
So it's kind of a hedge fund strategy is really what you're trying to pull here.
Oh, very much so, yes. We use a technique very similar to the hedge funds. In fact, a lot of what we're after is to use their same technique that allows you to ride these large movements of major markets and yet still hedge against volatility with a good downside strategy.
So it'll protect you, especially with trend reversals too, then, is what you're aiming for.
Oh, very much. I mean, an example. What we like to do is we'll take, for instance, a chart of the China market recently. Several months ago, we saw a chart of the Chinese market as exemplified by, say, the FTSE Xinhua China 25, that's the FXI. And we saw an opportunity arising. It looked to us like the market was going to double its 2006 gains. But as that market climbed, it also looked like the latter half of 2007, risk was going to climb a great deal also. So we used the wave strength charting system to isolate the potential upsides and downsides, to take the news and actually drill it down to usable targets that define both benefit and risk. Once we have that in hand, we can then assign option contracts to both sides, to both the potential upside and a protective hedge against the downside.
So how do you choose an asset to base these options on?
Well, it all starts with wave strength charting. I mean, the idea is that once we've spotted a large move in the market, and we would use things like daily and weekly price position, MACD, momentum, money flow, several different indicators that combine to show us both a major upside move and the potential, the minority report, if you will, the potential downside move. We will then ask readers to adopt an offside hedge strategy. That is to say, we want them to put roughly 3/4 of their money on the main move and about 1/4 of their investing money, in this case, on the downside move. With China, we asked them to put about 3/4 of their money on a call option, dated out to, I believe, about January or so, and then about 25% of that on a put option. So far, this has enabled them to stay in this play despite some real volatility. We've seen, China really jumped to the downside on a couple of these major news headlines, and yet overall it's way up. The whole basket is up about 176%. And these hedges, they factor out the volatility. They keep you safely in the play, and they let you sleep at night.
So this challenges that one sees with these fast-moving equity markets in China, you think this can cover it for traders? I mean, it's certainly a challenging environment.
Well, the principal problem you're going to have with any overseas environment like that is I mean, it's going to be the issues of information. It's going to be issues of liquidity. I mean, if you're looking at a Southeast Asian tire company, let's be honest, there's a limit to the due diligence you're going to be able to do. Nobody is going to be loading up a suitcase full of yuan and flying to Shanghai to go invest directly. We don't really do that. We do as much research as we can here in the States. Now, if you want to get involved in these plays from the States, now you're down to investing in their ADRs, which are easily traded here in the States, but the liquidity a lot of times is very finite in these ADRs. And by the time news percolates back to the States, it can be very difficult to get out. And that's the key. It's not like getting in, but getting out, feeling safe with these plays. I vastly prefer to use options that are traded right here in the States, frequently at the Chicago Board of Exchange market, against a broad market, against a broad option against the entire market. Like I like trading against the FXI if I want to play against China. These have tons of liquidity. You don't have to do but so much research. I mean, this is the top 25 stocks in an entire country. Now you have the security, you have the information you need, and you have the liquidity to get in, to get out, and to sleep well while you play.
Are there some other markets you're focused on besides China?
Well, I very much like the Malaysian market right now. I see a strong chance of a further upside. They've already grown about 42% over the last 12 months. I see a chance for some strong upside continuing there. I do see some risk. So what I would do again is ask people to put about 75% of the money they have allotted to this particular play on an upside call, and then about 25% again on a hedging downside put.
So could I get you to write that up so I can put it up on the website?
Oh, certainly, certainly. I'll be glad to give you guys the specific price targets and the right calls and puts to buy for this one.
Well, fantastic. Thank you so much, and thanks for coming on the show.
Always my pleasure.
We'll add Adam's report to the homepage of taipanfinancialnews.com under the Investment Strategies section. To learn more about his trading information service, go to www.wavestrength.com. Please join us next week for another opportunity for profits on TFN's Smart Trading Action Alert. For Adam Lass and Taipan Financial News, I'm Laura Cadden.